You did it. You built something from nothing. You hustle every single day. The ad revenue rolls in. The brand deals are getting bigger. Fans, subscribers, sponsors sending you money. You look at your bank account and see a number that makes you proud. A six-figure income. You feel like you have finally made it. So you decide it is time to buy a home. You walk into a lender's office with confidence, ready to take that next big step in your financial journey. You feel unstoppable. Then, the phone call comes. Loan officer on the line. Flat voice.
I'm sorry, but based on your income, we cannot approve you for this mortgage.
You are stunned. You are confused. You might even feel a little angry. How can this be? You make more money than most people you know. You have a solid down payment saved up. You have been responsible. The feeling is like hitting a brick wall you never saw coming. It is a deeply frustrating and common problem for today's entrepreneurs. This isn't a personal failure, it is a system failure. W-2 from a single employer, predictable, bi-weekly paycheck, simple tax return. Your income is different. It comes from multiple sources. It fluctuates. You have business expenses. The old rules can't handle your new way of earning, and that creates a massive, unnecessary barrier to real estate. That rejection letter doesn't have to be the end. In fact, it should be the beginning of your education. You are not unqualified. You are just trying to play the game with the wrong rulebook. There's a different path. Here's the core of the problem, stated simply. Traditional lenders live and die by your tax returns. Specifically, they look at your adjusted gross income, or AGI. This is your total income minus all your business write-offs. As a smart business owner, you are told to write off everything you legally can. Camera gear, software subscriptions, home office space, travel for content creation, marketing costs. You do this to lower your taxable income. This is a good thing when you are paying Uncle Sam, but it becomes a huge problem when you try to get a mortgage. Let's say you grossed $150,000 last year. That is a fantastic income. After you write off $80,000, your tax return shows $70,000. Conventional lender sees the $70K. FHA lender sees the $70K. VA lender sees the $70K. They only see the $70,000 left over. In their world, you are not a six-figure earner. They will only lend you based on that lower number. There is another way. It is a tool that smart mortgage advisors use for self-employed folks every single day. It is called a bank statement loan. This loan program was created specifically for borrowers like you. The lenders who offer these loans understand that tax returns do not tell the whole story for an entrepreneur. They know that your true financial picture is not on your tax form 1040. It is in the consistent flow of money coming into your bank account, month after month. This is a game changer. Here's how it works. Instead of asking for 2 years of tax returns, the lender will ask for 12 months of your business or personal bank statements, or 24 months of your business or personal bank statements. They are not looking for your write-offs. They are looking for your deposits. They will add up all the qualifying business-related deposits over that period. Then, they apply an expense factor, often around 50%, but it can vary, to arrive at a qualifying monthly income. For example, if you consistently deposit $15,000 a month, they might qualify you using an income of $7,500 per month or $90,000 a year, even if your tax return showed much less. This approach gives a much more accurate and favorable view of your ability to pay a mortgage. It reflects your cash flow, which is the reality of your business. It sees the gross revenue, not just the net profit after deductions. For a YouTube creator with steady ad revenue, a podcaster with consistent sponsorships, or a freelancer with regular client payments, this method aligns with how you actually earn and manage your money. Now, this solution sounds great, but it is not a free lunch. Nothing in finance ever is. Bank statement loans come with trade-offs. You need to go into this with your eyes wide open. Because they are not government guaranteed, lenders take on more risk. To compensate, they charge a higher interest rate. Do not be shocked if the rate is a full percentage point or more above conventional loans. This is the price for flexibility. You will also need to bring more cash to the table. Traditional loans, down payments as low as 3%. Bank statement loans require more. Expect at least 10%, commonly 20%, sometimes 25%. Lenders want to see you have skin in the game. They also want reserves, extra cash after down payment and closing costs. That shows financial stability and ability to handle surprises. Underwriting will be very thorough. They will scrutinize your bank statements. Lenders want a clean, consistent deposit history, large deposits, unusual deposits, one-time cash deposits. They must verify income is from normal business operations. You cannot just transfer money to inflate deposits. Be ready to provide invoices. Be ready to provide contracts. Be ready to provide reports from your platforms. Let's bring this all home. Earning a great living in a non-traditional way does not disqualify you from buying a house. It simply means you must be smarter than the average buyer. Getting denied for a conventional mortgage is not a final verdict on your financial health. It is feedback that you are using the wrong tool for the job. Your path to owning a home is not blocked. It is just different. You need to match your unique financial situation with the right loan structure. You also need the right guide to help you navigate the process. The big takeaway is this: your cash flow is your strength. While traditional loans focus on your tax returns, a bank statement loan can be structured to focus on your actual deposits. It is designed to work with the way entrepreneurs like you are actually paid. Stop letting a low number on your tax return define what you can afford. Start focusing on documenting the real money that flows through your business every single month.